Alright, welcome, Forever and Profit. This is Ryan, you already know. Tying All Together 3.0. This training is going to give you additional confirmations, compared to Tying All Together 1 and Tying All Together 2. This training is going to give you 4 more confirmations. So it's really straight to the point. I'm just adding more confirmations and I'm going to explain it during the webinar. And obviously I'm going to draw a Tying All Together method within it so, everybody could connect. You watch it, whatever you got to do. At the end of the day, this video is money, so take notes. And let's begin. So, template will be basically this, in addition to what I already, went over in the other Tying All Together video. So what you're gonna see here is basically me adding movie averages. So the first movie averages, we're gonna use a blue. This is basically old school FIP material. A 5 simple blue, and I left the lines thickness as 1 and 1. The first thickness, pretty much. Line red. Okay, it's a 12 simple. The red, first line thickness. And then I did a 50 EMA black, and over here was second thickness. 3 movie averages. Within those 3 movie averages, you have 1 confirmations of these 2 crossing, and then another confirmation with the 50 EMA being a take profit. So we add the day breakers onto the mix of, just drawing out normal, tying all together. Pretty simple, straightforward. Just drawing out normal tying all together method. Bam, supply. Demand. Fibonacci. I added more levels to it. So right here, we're trying to predict how to get this day. The blue is 5. Remove this over here. Okay. So we're adding levels of more Fibonacci. My chart's blurry. I don't know what to say. My chart's pretty much big. The blue is a 5 simple. A red is a 12 simple. And then you have the black of 50 EMA, so I'll write it out. Blue 5 simple. I'll color code it. Okay. I'm gonna leave this up for like 15 seconds as I'm writing it out. Wow, I'm having a moment. Red 12 simple. Okay. And then we have a black, which is a 50 EMA. So, you can take a screenshot, do what you got to do. But here you go. These are the moving averages that we're going to be primarily focusing on. And I'm going to explain why they're powerful and how it's effective and, adding value to tying all together. As you can see pretty clear right here, when price broke out, you can see that the blue line crossed over the red. When the smaller number crosses over the bigger number, it indicates, smaller number crossing over the bigger number, it indicates a breakout or into a downtrend or an uptrend. So it could work both ways. As you see here, the blue line, the blue moving average, crossed over the red moving average, which gave it a breakout to the upside. Blue is underneath the red. This is downside. The black line, is used for 2 different things: direction of trend changing, or a take profit. As you know that the markets all have a volume base to it. So when you look at the 50 on the RSI, you're gonna notice that the 50 over here acts as a base on the 50 over here and then the base on the moving average and the market conditions over here. Now, you will notice that the 50 is also used as a neckline towards the double bottoms within this crazy multiple structure layout right here. When I turn on my day breakers, you will see it more clearly. It hit once, it hit twice, it hit 3 times, and then it hit the 4th time, which is we call it our last kiss, to the zone. Didn't really break it, pretty much, and the market goes right back up. But you can also see right here, it's a double bottom inside of a bigger double bottom within another double bottom. So boom, right? Goes up, boom, boom, goes up, does a one big double bottom with this whole area. And each day that it hit, it did double bottoms, which made an inverted head and shoulder here, a head here, and a shoulder here, which shot up the market. Here's a double top. And I ain't gonna lie, I failed on this NFP. I tried to take a stop hunt to the low, which I traded, which only lasted less than a second, and it shot up. But this is very choppy of an NFP. Overall, the trend I already knew was going to go back down. So right here, another hit to the low, last kiss, once, twice, another double bottom, which you can clearly see it hit 1, 2, 3, right here, 4, and it shot up. Now, the value of this is that when it shot up for that 4th time, that last kiss, you see that it forms a double bottom and it fails to break this low, but ultimately, yes, it's EU. Whoa, why would you be in a sell? Get out your sell. It's a double bottom for 1. 2 is divergence over here. Okay, the trend is now going back up and it already broke this neckline. And it shot up over 100 pips. It broke past take profit 1 and take profit 2, and it went all the way to 261.8. There's no reason for you to be entering a sell. This is a swing trade to the high, straight up. And I'm going to go to a higher time frame to explain that in more depth. Okay, so right here, as you can see, the market shoots up. All right, good. The market shot up. This whole area is a zone. Okay, if this is a zone, you can see price already broke the zone. It broke supply and it came back inside of it, acting as a newfound area of demand and newfound support, meaning the trend will continue. We're only on level 1 push. We're looking for a level 2 and then a level 3, or a level 2 reset, or whatever the case is. Okay, so I wouldn't be selling that pair. Pretty much, this is another zone. Now, what I want to get into is the fun part. And the fun part is the confirmations. Yes, the zone is on the H4. You see the double bottom on the H4 with a lot more divergence on the H4. That's how it's also an uptrend. You can tell it's flat right here. Okay. Double bottom, the 50, like I was mentioning, the higher the time frame, the stronger the trend. The 50 EMA could be used as either a take profit, as you can see when price shot up, it could have been used as a take profit, or it can be used to dictate trend change, or it helps out with giving you the neckline. It's like a nice ratio. Right here, as you can see, the neckline is it reversed off of the 50, came back down, shows divergence inside of the zone, and it broke out to the high. Now it's breaking an area of supply, and now it's demand, and you can tell that the price is still going to continue up. Now it's a double bottom. Now, going over Time Altogether 2.0, because I went over an intraday setup on Time Altogether method 1, we can go with 2.0 now, and we're basically looking to figure out how to predict this area over here on the H4 chart. So, utilizing, give me a second. Utilizing Fibonacci, you're going to see that we can draw it from this low to this high to predict what's going to happen over here. Now, what did I add to 3.0? Besides the moving averages, which I just showed you 2 confirmations, here's another 2 more confirmations with this Fibonacci level and this Fibonacci level. So I'm gonna go ahead and give you the Fibonacci levels, and you can write those down. Okay. Leave that up for a couple more seconds, which is these two. Now I'm gonna delete that. Boom. So now that we see that the market is above 38.2, the extension that it most likely will go to will be negative 27 or negative 61.8. So for your question, Robinson, honestly, price already cleared the neckline. So I won't say this is a lower low. The trend is changing. You see it as lower lows right here. If you want to just draw a trend line, say, hey, let me draw a trend line. I want to see if it's lower lows or higher highs, right? Well, here you go. It already broke out, meaning its trend is changing. Okay? The lower low that you want is gone. The trend is honestly changing. Wow. All right, hold on. This is so not happening. All right, boom. The neckline is right here, and price already broke past it. So we got two confirmations with here, Fibonacci, and then the other confirmations being ADX. I mean, not ADX, the moving averages. But, you know, the more biggest part about the advantage of these moving averages is not that it crosses. And why did I switch from an 8 EMA and a 21 simple and a 50 EMA? Is the main reason because one, that was never really like fully my style, and I understood the 5 and 12 is more simple. But a lot of people are not going to understand the 5 and 12 like I do, but I'm about to explain with it. Okay? This is the more biggest part, the best part about this whole video is that the 5 and the 12s, like the 5 and the 12s, what it does, price, when it goes to try to break out, you're going to notice that it's going to come back down and grab, like I wrote in the group, it will grab the moving average. Okay, so for this blue to cross over this red, price will come down, grab it, and pull it right back up. Are you following me with that? It's going to grab the blue, price is going to come down, grab it, retest this area, and pull it up. Like over here, when this crossed, you can see that there was a previous wick right here. This wick happened because price went up, grabbed the blue, and then it pulled it down for it to cross over the red, indicating a downtrend. So it's going to do the same thing over here to pull it back up, so give it back that uptrend, because it didn't cross yet. So it has to go down, grab it, pull it, go back up. So we can literally predict where price most likely is going to go down to, around this area. It's going to go down and grab that blue. It has to cross over red. If price needs to change, it needs to cross over red. So right here, we can predict that price is most likely to come back and test this area, which is this previous neckline, okay, to grab it and pull it back up. As you can see here, it's pulling it down. So we know it's going to come back down here and then go back up. Might form a double bottom. Who knows? But, you know, that's where you add the Fibonacci, time altogether method 1, and we can predict that price is more than likely to come back around here in this area. If it's going to grab the daily. Or it could come by here on the 38.2 and then wick out right here and then go right back up. Okay, so we know price is more than likely to retest down here somewhere in this area. It can literally retest, oops. It can retest over here. It can retest over here. It could close above this. It could shoot a wick down here. All we do know is price is going to retest this area. And then it's going to go up. Based upon getting that pull that it needs over here on the daily. Everybody's with me so far? That's a legit confirmation telling you what's gonna happen. So you can legit go back test it. You can go, figure it out, see if it works. But I'm letting you know straight up. These are confirmations that's gonna help you, figure out trend breakouts if that's your struggle, or you just want more confirmations. Because the rule of thumb is we're looking for 3 to 4 confirmations to enter a trade. If we got 3, 4, 5, 6, 7, 8, 9, 10, 11 confirmations to enter the trade, it just means more value. Does that mean adding more indicators? Hell no. MetaTrader 4 tools only. If it's in here, if it's in your toolbox, okay? If it's in your toolbox over here, then I recommend it. If it's not in here, and it's not in here, I don't really recommend going to go figure out a whole bunch of indicators. Okay, it has to be not all this crap. The defaults. That's what my best accuracy is, not through the customization of indicators. If I could default my whole entire toolbox, I really would. But all of this is mostly cluttered. But default stuff will help you, increase your trading accuracy. Damn, this is delay. I wonder what Wi-Fi am on. Not very actually good. No, the green lines are just they're just normal support and resistance. They're not no PRZs. The PRZs will be on Fibonacci, which is the blue. I'm actually gonna go check the GJ trades. I just want to draw this time altogether 3.0 real quick. It's just something simple. It's not advanced secret stuff. It was just honestly moving averages and Fibonacci, more confirmations, which will really help. Even on mobile trading. So if you're using mobile, I definitely recommend you add these. I took off Bollinger Bands off mobile because obviously this is clutch, and adding these 2 Fibonacci levels is definitely clutch, because I always will tell people straight up, 23.6 and 0. When price gets between 23.6 and 0, what are we looking for? Structure, right? But what if we have more answers? What if we had more accuracy? And we found out that, just using those other 2 Fibonacci levels, we can have a better trade. So I'm going to show you an example right now. Over here, I kind of was back testing it, but I entered my trade over here and caught this swing trade down to the low. And, that's when I was like, Euro USD is going down. Euro USD is going down. Everybody was like, no, it's not. And I was preaching it for a whole couple of days. Well, I didn't have the 27 and the 61.8 yet, the negative ones. I just knew it was going to happen. You feel me? But if you look over here more carefully, you're going to notice that I drew it from the normal time altogether method, which is from this low to this high. And what do you see? Price reversed off of negative 27. It did a double top off of negative 27. Okay. And I entered the same trade, not because of negative 27, because I knew it was just divergence and it was about 23.6 and 0. So I knew it was in structure. But now I have more confirmation because it's at negative 27, and another confirmation of the blue line crossing over the red. So not only was I having, now it's damn, just so much more confirmation. What would you do as a trader? If it was doing this, would you put more trades? Would you take a little bit more risk? Would you feel more happier? Would you feel more confident? Would you feel more, satisfied? Do you see profits coming in? Can you hold a trade in a longer period of time because it broke past the black line, which is, is telling us a trend direction change? We can clearly tell it's a double top. One big double top, we could clearly see it's a head and shoulders for me due to a higher time frame. So the only goal that we have is to, analyze it better. And one of the best parts about this whole entire analyzation was that even if you drew a zone over here and you had your Fibonacci drawn out right, and you saw that the fibs over here was already breaking at 38.2, and you had to redraw your fibs again for the next day. Oh man. Right here, from this high to this low. Boom. And it just gave us more clarity. It's like, well, damn, price is underneath 38.2, okay, and it's continuing its trend. But what does that mean? Well, look, it fell on zero, negative 27, and then it went down to negative 61.8, and then it went into another zone over here, and then the price did what? It shot up. Why did it shoot up? Because we're looking for structure once again underneath the 0 and 23.6. So it went up right here, and look, it pulls, and then we can literally redraw fibs once again. It's literally just plug and play. Bam, bam, keeping it simple. To get the more numbers, right? Price closed above 38.2, and look, it reversed off of 78.6. Market drops, reverses off 38.2, and pulls back up. And then we once again we withdraw our fibs all over again. Just tying it all together method. Bam. From the low to the high. And what do we see over here? It's honestly just the same concept. It's just consistency with the concept. Price does what? Oh, look, negative 27. Price shoots up past 61.8, negative 61.8, and it falls underneath 38.2. This is yelling, by the way, yelling and raping everybody. But look, price falls down. 161.8, take profit 1. My bad. 127, take profit 1. 161.8, take profit 2. And look, it falls all the way down here. So it shoots literally all the way down for 161 pips. One standard lot, $1,610. 10 lot, 16K. 5 lot, half of 16K. 13 racks. My bad. Oh, fuck. AUD CAD daily chart, head and shoulders. I don't trade AUD CAD. But give me a second. I'm gonna go look at GJ. I haven't touched this chart in forever. Tying all together 3.0. My bad. Tying all together 2.0. Where I was like talking over here saying how it's gonna retest 80.6 and shoot all the way up. If you watch that video, you will literally witness me say how it's gonna rise and shoot up a crap ton of pips. Literally, this is where I was talking about it. Because of 88.6 and retesting the zone, which was on the daily, and price literally shot up 850. Fuck, how many pips was that? Price shot up for where I was talking about it. 846 pips. And I literally haven't touched it. So if you want, screenshot this, quote me. Whoever says that I did not have this right, I'll pay them $5,000. This pretty much is in a video 2.0. I literally talk about this entry and it rising, and it did exactly that. It finally hit 38.2, and look, it did a double top, and now it's falling. It closed underneath 38.2, and now it's dropping. So how did I get these numbers? It's very simple. I think I drew it on the daily. Bam, bam, I drew it on the daily chart, and it predicted all of this. I just haven't redrawn it, obviously, but you can see how it's falling down. It's respecting that. Alright, so now I'm going to probably draw another Euro USD chart. Let me just do this real quick. I don't need this one no more. GBP, JPY. Yeah, I didn't know about that. Push spacebar. Alright, this shit is all messed up. Wait, let me damn sure confirm the teacup. This chart still have indicators from the other chart. Give me a second. G. Is a teacup in present market? Where you want me to confirm the teacup? Teacups are daily. Okay. This is not a teacup. This is just some big double bottom. Feel me? This is a daily zone. Bam, bam, double bottom. Now, if you said inverted head and shoulders possibly forming, I could roll with that one. Yeah, I still use volumes. Just I don't have it on the chart right now, but yeah, I do use volumes. Volumes is still, clutch. Give me a second. See, volumes were high all over on the daily chart. It's not, you can't really do volumes too well on the daily, but volumes is very well. Now, if y'all saying you're about to basically damn tongue twist, wow, that you about to see that it's about to be inverted head and shoulders on the daily, then I can roll with that, like I mentioned, because if we basically find structure within the zone, which will be here and here, I can roll with that. Why? Because if price falls back down here, we know that it's gonna respect this over here. So we get this is one big shoulder, the double bottom, okay? And right here would be your left shoulder. If price breaks that, then I say, hey, sell it. But if price reverses in this area on the daily, I say, hey, buy it. Inverted head and shoulders. And then within that same inverted head and shoulder, we can notice that this is a neckline of a double bottom. So price, if it does, does this, bam, swam, we out. Okay? Pretty much straightforward. So anybody got questions? Does 3.0 make sense? The moving averages and the addition of Fibonacci, more Fibonacci levels. Anybody got questions? Questions? Values? Okay. The Fibonacci laws, I'll show you them in a couple of seconds. Volumes is basically giving you liquidity in the market. So let's say if I was on the H1 time frame, okay, and I want to figure out where price is being bought or sold at, and I want to know more precise, that price is going to reverse in a certain area. Notice that volumes activity will give you the most activity inside of a zone. The liquidity of the values is people buying, selling in all different directions. But if you trade values the correct way, and you're trading inside of a zone, and you see divergence inside of the zone, and values is present, it means that the banks, institutions, your hedge funds are all buying and selling inside of that zone. So you want to trade with the banks inside of that zone if you see divergence. Example. Perfect example. Pay attention. There's a double bottom here. Okay? It's really, really ugly. Bam, 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 bam. Okay? Right here, in this same area, it's what? Inside of a zone. And we see large amounts of activity. Right here. It calms down, consolidates right here. And then it bursts out right here, and you can see right here on EDX it bursts with it. But in essence, with all of that, while it's inside of that zone, which is supply, we see that it's bullish momentum being displayed inside of the zone, meaning price is getting ready to break the zone. So the supply zone is now going to eventually become demand. If price breaks it, comes back in it. To answer your question on values, liquidity in the market being moved, large amounts of volume here, large amounts of volume here. ADS confirms it. Volume being bought inside of the zone. Divergence has to be present for zones and volume to be, accurate. So I'm gonna write that out. Okay, so volumes in a zone must be with divergence. to be accurate. Yes, I still count levels. That's going over levels of divergence, tying all together video. I'm just adding confirmations. I'm not going over the full training of tying all together. It's already there on the website. Nothing changed, but adding more confirmations. The updated 2016 section is exactly how I trade every single day. When I do trade. I don't really trade every day, but I'm comfortable. That's all I can really say. I'll draw the Fibonacci right now, so you can get the Fibonacci levels that you do want. So anything after 4236 is my Fibonacci levels. So I'm gonna leave each one up for a couple of seconds, and then if you want them, go rewind the video when I post it. It should be up by tomorrow. Okay. All right. Since we're done doing that, any more questions? Everybody's happy? We're good? If you got questions, type 2, so I'll stay on. If you don't got questions, just push 1. It's pretty simple. All right, so I'm basically gonna end the webinar, and I'm gonna have it posted. So it should be up in the group. ESAP, tying all together 3.0. So it'll be in my section, not on the webinar side. And yeah, pretty much I'm gonna head out. So be out. Mike. Wait, EU? Or what are you talking about? EU. Read EU. No, you do not enter when price grabs the blue. You enter when you have structure and reversal, confirmations. You just don't enter a trade because it's doing something. You enter a trade with confirmations. We went over this. 3 to 4 confirmations. You enter a trade. GBP USD. Damn, my phone is getting blown up. I'm about to dip. GU, I hate you. I don't like GU. My prediction? I don't have a prediction. I have to draw it out like really, really. Let me draw this out in like 5 seconds, okay? Yeah, give me a couple of seconds real quick. No, I got you. I'm gonna draw a GU. Give me like 30 seconds. Shit. Give me like 30 flat seconds. Draw this out and what I do, what I does. I really don't like GU though. Damn, a fat zone. Well, I already figured it out. 1, 2, 3. Let's see if it broke it. No, let's drop a line here. Let's drop another line here. Price still didn't get to the area. Take profit 127. The buy is the correct answer. Ding, 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 ding. Price still has some time to go. I don't use buy or sell limits. Market reset, level 1. Here's 1, here's 2, here's 3, here's 4. Market resets, level 1. Yeah, you see 4 levels, but it reset. Here's 1, hold on, wait. Here's 1, here's 2, here's 3, here's 4. Big double bottom, no double top, resets, level 1. Which falls in line with getting to higher highs over here. Alright. Boom! Alright, so I should be done. When the new market structure changes up. So if you see a double top, that's where you count back into going into a downtrend. But since in this case, double bottoms are just reoccurring, after 4, it resets. So 1, 2, 3, 4, I'll label it, and I'm out after I'm done labeling it because I gotta go. 1, here's 2, here's 3, okay, and then here's 4, and we see a double bottom. And let me add divergence real quick. Pretty much price is flat here, and we can see this here, right? Bam. Pretty much just a reset. Just drawing this out really, really quick. Okay. Well, I actually make this better. Level 4. Let's just say if it was a double top and it had divergence, which it did. Okay. And we clearly see it as being divergence, but price, it reset at the low and it just made a full double bottom. So price is a new high right here, and boom. Okay, so that being done within a couple of seconds, I'm gonna dip and I'll have this up in the group most likely then tomorrow. Cool. Alright, I'm out.